Welcome back to the Basic Concepts series at TRC. Today I'll explain structural pivots, or also known as confirmed swing highs and lows. The definition: these are important horizontal reference points where sentiment switched, or in other words, where price pivoted and then moved beyond the last meaningful pivot on the other side of the market. Structural pivots, confirmed swing highs and lows, are best understood with a visual as we explore the process of price action on the right edge of the chart, and we follow the logic of the pivots that are left behind as price develops. Let's consider price action here in the beginning of this week, where the Sunday night open promptly led to a steep rally in price just above the Friday session highs. Following the steep rally, price stabilizes horizontally and then gets rejected with just as steep of a move, leaving behind a chimney formation. The chimney is the smaller version of an island formation, which you're going to learn about in the next video of this series. Judging by the reaction of the market here at the 58 area, it seems that there are still resting buy orders in this vicinity. Yet, to my eyes, none of the buyers that have invested in this position at this point have really proven their intent to take the market to higher prices. For that matter, ever since this high was created, all the buying in this vicinity, 1757 to 1758, is yet failing to exceed the previous high in a meaningful fashion. There was definitely no separation or consecutive closes here that suggests that the buyers are going to take us above 1766, 67 into the 1770s. Therefore, if you look further back, you will see that the last confirmed buying interest really started at these levels, since this is the major swing which created the new highs. Therefore, all these buyers here are weaker hands trading at higher prices later within this overall progression. None of these lows constitute structure, despite the fact that there's evidently buying interest at these levels. The structure, or the proven buying interest, is down here around 1753, since the buyers that rallied here managed to take out the previous high. This is the difference between a structural and a non-structural, in this case, low. All these buyers are yet to prove themselves in the form of taking out the high where the sellers were last exerting control of the market. And indeed, if we follow what happens here, is the sellers wrest control in the 62-63 area. They force the market down at the base, and notice the amount of pressure that is exerted by the offer towards the bid, ultimately collapsing this level, running through the stops, and leaning down at the structure or at the confirmed major swing low. We do see price stabilize at this level momentarily, but the pullback here is merely 30 ticks as opposed to the 50 ticks we had here, suggesting that the offer still is urgently moving lower and lower to absorb all the buying offered at this structure. And ultimately, as this structure collapses, the only barrier left to price is the Friday low, which evidently doesn't offer any meaningful support. That level does break by about well, it seems good, $150, which is a little over the noise level of this market. You can see the vertical collapse as all the stops, all the long positions which are still potentially in this market are taken out. Now, we would expect that this market will continue to the downside. Instead, however, a door forms just underneath 1749. The market goes horizontal, and even a $300-400 pullback is not able to invite enough sellers, even though we keep seeing the same behavior here. Now the pressure does open the door momentarily, but price promptly gets sent above. This door sequence here is a classic one, and you are already familiar with the interaction around this structure or this formation. The buyers do take it right back above the door. There's a test and beautiful crisp separation. Ask yourself, why would the buyers stabilize the market right below broken major support right here? Well, it's likely that this market ran out of sellers. After all, the range here within the session is already significant. We're working highs here in the upper 60s all the way here. The lows at the bottom of the range are at the upper 40s. So it seems like the market is quite stretched and is probably running out of sellers. As we move higher, we do break this high, which is not a structural one, since the sellers that created this high were not able to create a meaningfully lower low. This poke here is definitely within the noise level of the market, which is currently right around 8.5 ticks. Definitely only noise, definitely just a poke, and as price pops back up and takes out this high, it's getting back to where the actual minor swing high or confirmed swing high is. This is a structural high because the sellers that took control of the market in this vicinity and created that pivot did lead prices to new lows, especially since they managed to break a significant reference point or the bottom of the field from the previous session. The confirmation for this low comes with the break of the structural high, which follows through here very deliberately into the upper 50s. Once the minor swing high breaks, the low behind it, which is the major one at the door, gets confirmed, and at this point we could comfortably and confidently suggest that price is likely building another major swing high, with this low here being a potential minor swing low. As price comes back around, you see indeed that there is some buying interest at the minor swing low, but ultimately it breaks, and the real test for the lows, for the bottoms, will be here at the door. You see that the buyers are still present. We get the same great separation on the way up, and indeed, if you're interested in playing this mean reverting game, which is as the market makes new lows, there's no further follow through, therefore we're likely to rotate back to the highs. The place to test that idea is right here, where you could comfortably get long with your stop safe behind confirmed structure. There's the confirmation in the form of breaking a high to the left, and of course, if you are correct, this mean reverting move should take you at least back to the middle of the current range, and of course very likely towards the top of this range. This is what happens in the regular session on Monday, as price gets initially to these highs, and eventually after about $400 pullback, 450, it makes the new high and climbs on higher lows and higher highs to challenge the major swing high left at the Sunday highs. We do break this level, price comes back around, builds up a low right here, but this is not a structural low because the demand that comes for prices at these levels is yet to prove itself. For this level to become structure, we have to break the high that precedes the pullback. In this case, that doesn't happen by the end of the session, and in the beginning of the Tuesday session, price breaks this level, which never becomes structure. If we look back within this now evidently again mean reverting market, which tends to find these horizontal barriers at the bottoms and at the tops, we do have some minor structure buildup on the way up, but within a mean reverting market, the middle is usually very thin, and it's unlikely we're gonna invite significant buying interest here around 1760 or below. Price in the overnight in the European session has a very interesting sequence where you can see that a minor swing high forms here, and it gets confirmed as we see lower prices breaking the low right before it. However, as price retraces on the way up to test this structure, notice that we go a little bit higher, but definitely no separation or follow through. Therefore, within noise level, this minor swing high is holding. We get another push to the downside, and notice that the lows that are created are meaningfully lower than last time. This is definitely about 150 ticks, or about twice our noise level. Therefore, this is a meaningfully new low. On the way up, the sellers again are playing defense by managing to hold the high within the noise level of the market, and on the way down again convincingly lower lows. Ultimately, this tug of war in the middle of the range is predictably won by the sellers, and this results in the logical test of the major bottom, or the confirmed major swing low. Price does stabilize there. We do see higher lows and eventually higher highs, and naturally we rotate towards the middle of the range with very good acceleration, which is typical for the middle of these mean reverting markets. This is where the session pretty much ends, with again a marginally higher high here and a flat top. Very much the same formation that we had on Sunday night here, just above the Friday highs on a tight coil, which results ultimately in a chimney formation and sends the market right back to the bottoms. On Wednesday, once again very similar to what we saw on Monday, price takes out the major low yet stabilizes at this door, and that predictably, in a repeating pattern fashion, creates the same low that we had here. Very similar relationship to the one that we had on Friday, the same one on Tuesday. So we get a repeating pattern at the extremes in a mean reverting market. If you did show up here to play the trading game early enough on Wednesday morning, you might have managed to snatch one of these marginally higher lows before price moves too far away in order to catch the mean reverting move. You can see that we rotate virtually to within $100 of the highs. Very good trading here based on confirmed structure and a repeating pattern within the Wednesday session. The bullish rotation here also offers a great example of minor structure being created and respected. You can see that there's a low that forms here. Since we do get new highs which break this pivot, this level gets confirmed. As we get a pullback, buyers aggregate about $200 higher and ultimately create another minor swing low. This low gets confirmed as we travel to new highs, actually high ticking the previous session's range, which is something we're already used to seeing this week. And ultimately, as we get rejected here, notice that the minor structure offers solid support, and then we rally back towards the highs. Great example of why you should keep your stop behind structure if you are long somewhere in this vicinity, anticipating an attempt on the tops, and if you didn't manage to take your profits at these highs around 1765, then leaving your stop behind structure would have allowed you to stay through this pullback and get another chance to close virtually at the highs of the session around 1765, where you would be sitting on a comfortable amount of profit, and the decision whether to play defense and bet on the end game of this mean reverting market, where we would ultimately hopefully see prices into the upper 60s and the 70s. This is Tape Reading Concepts Basic Concept series. I'll catch you guys in the next video.